Today we're going to answer that age-old question that's been on real estate investors' minds for years. It's something that comes up time and time again. And that question is, am I a natural blonde? No, the real question is, should I hire a property manager or self-manage my property? Those in the hiring category tend to cite the main reason as being they're able to save time, and those in the self-management category tend to cite the reason that they're able to save money. So which one produces the best results? Well, during this episode, I'm going to break down both the pros and the cons of both approach so that you can choose the method that works best for you. Hi everyone, my name is Michael Glunk, and I'm a real estate investor from Colorado who is able to quit the W-2 world by investing slowly over time in real estate. Now, over time, my portfolio has expanded and contracted. This is primarily driven by the fact that I've changed up my strategy over time. Initially, when I first started, I was really focused in on cash flow. And then over time, I adjusted it. I still wanted to prioritize cash flow, but I also wanted to find markets where I could grow appreciation higher than other markets. And so I've made changes to my portfolio. In fact, just at the end of last year, I had around 24 units, but I decided to sell off my entire Michigan portfolio. To use a monopoly analogy, I basically sold Mediterranean Avenue and Baltic Avenue with hotels in exchange for Boardwalk with a house via 1031. And so I did this again to achieve those goals. I don't personally focus on a specific number of units. I focus on the quality of my properties. Over time, I've both long-term rented and short-term rented my properties. And I've also self-managed some of my properties as well as hiring out property managers. And so I'm really excited today to break this down for you. All right, so now let's talk about the pros and cons of hiring a property manager. And let's start with the benefits. Most people cite one of the core benefits is that they don't want to have to answer that dreaded 3 a.m. call. And the reality is, these things can happen. In fact, I've had to go over and fix toilets at times that weren't opportunistic for me. The reality is, I think my tenants and guests, they look at a toilet and they see something different than I do. I think they somehow feel like it has a garbage disposal function because they put things down there that simply don't belong. And the great thing about having a property manager is they're the front line. They're there to help facilitate these issues that you never even have to hear about them. They're also your local experts. They're there to optimize your property. They have an understanding of the local market. They know how to market your property and they know how to price your property accordingly. They want to optimize the property to meet your goals and desires. And this oftentimes means increasing rents to the highest and best use for your property in that market. During certain instances, though, it can mean actually lowering your rent rate a little bit. And that's because they're trying to optimize it throughout the year. So from a long-term rental perspective, this means sometimes they're trying to minimize the vacancy of the property. And from a short-term rental perspective, what they're doing is they're trying to maximize the occupancy to, again, make sure that you're optimizing your property and producing the most cash flow you can throughout the year. Another thing to think about are tenant laws. Right? These are changing more frequently today than they have in the past. In fact, in my state of Colorado, there are many bills right now in the Colorado House and Senate around specific tenant laws to both short-term and long-term rentals. And your property manager is going to be well versed on these. They're going to be keeping an eye on these tenant laws and making sure that you're in compliance with all of these new rules and regulations. Your property manager also creates some separation between you and your tenants, which helps from a liability perspective. And of course, your property manager has all these cool tools to help your property run efficiently. Things like accounting software, things like screening tools to make sure that you're getting the best tenant in your property. And then from a short-term rental perspective, they have things like messaging and pricing tools to make sure that everything runs smoothly and you don't have to worry about anything with regards to your property. And as we mentioned in the beginning, hiring a property manager gives you time back to focus on growing your portfolio or doing the things that you love to do, and that's priceless. So now let's talk about the cons of hiring a property manager. Well, first and foremost, they're not doing this for free, right? And so you're going to have to pay them a fee, and that fee typically runs somewhere between 6 and 12%. And I know that that sounds like a huge variance, right? Now, on the short-term rental side, there's a pretty big range here as well, too. I've seen typically in the range of the high teens to well up and above 30%. But the reality is there's many factors that come into play here. First and foremost, the one key factor is it depends on where you live. Certain markets are more expensive than others. And the second key factor is the number of units that you have with the property manager. The more number of units you have with the individual, well, then that allows you to negotiate down a lower rate. And the second con is that they're never going to run the property exactly as you'd like. Look, they're managing a portfolio of your properties as well as others, and they're going to attempt to get everything right the way that you want it. But sometimes it doesn't happen, and that's just the nature of hiring a property manager. Let's talk about some tips of hiring a property manager. First, you want to interview a few. You don't just want to interview one. you want to understand some things about them. I'd like to first ask them questions about themselves. I want to understand, yes, the rate that they're charging and what they're going to do for that rate. I want to understand what benefits I'm going to get. I want to also understand what differentiates them versus the competition. And of course, as I'm talking to these individuals, I want to gain some of their knowledge because they are the local experts. I want to gain as much local knowledge as I can from them as possible. And I'd actually be curious, what are some questions that you find to be helpful that you've asked property managers? If you don't mind, drop those in the comments. I'd love to take a read of those. So after you've hired a property manager, the next thing is you're going to need to sign a contract with them. And you want to make sure that you read through this contract with them and ask them any questions that you have. And if you have any major concerns, you can always have a lawyer read your contract for you. I also recommend that you schedule time with your property manager after you start with them to make sure that they're achieving everything that you want to with the property. It's good to have periodic check-ins, especially when you start using them as a management company. I also like to make sure that my property manager's interests align with mine, meaning that we're only making money when we're making money together. If my property's rented, then great, we're both making money. If it's not rented though, then nobody's making money and we're both striving to make sure that we get that property rented. So now let's transition over to self-management, and I want to start with a disclaimer. If you live more than an hour from your property, I would highly recommend that you hire it out to a property manager. Now, with that said, let's get into some of the benefits of self-management. First and foremost, you're putting more money in your pocket because you're not spending it on hiring a property manager. Now, as we mentioned earlier, management fees can range anywhere between 6 and 12%. In the markets that I typically invest in, what I have found for an individual going to a property manager with one unit, it usually costs me around 10%. And so that's an additional 10% that's in my pocket. Also, another benefit is that you're the one that's making all the decisions. And so for new investors or investors that really like to be hands-on, this creates a great opportunity for you to really get in the weeds to the property and how it functions and really develop how you want to manage your property and or develop a template for how you want your property managed in the future should you decide to move it on into a property management situation. In fact, when I was buying my first property, it had a garbage disposal, which I was excited about because I felt like this was a great amenity to have. I didn't have one growing up. What I quickly found though was that tenants tend to treat this thing as if it is just a trash can and put anything under the sun down it. And so I was constantly having to go and fix the garbage disposal and replace it. And so eventually I realized that I wanted to pull all the garbage disposals from any future unit that I had to prevent that issue. And so the great thing about, again, having a self-managed property is that you get to make the final call. You're involved in things, for example, the finances. When an expense comes up, you know exactly when it happens and you can have greater and tighter controls over that versus if you're using a property manager. What often happens is if the expense is under a certain dollar amount that you've agreed upon, you don't necessarily find out that the expenses happen until you actually get your monthly statement. Another benefit is the fact that when you are managing the property yourself, you become more intimately intertwined in understanding of the property. You know what's been working, what hasn't worked, and you can make those adjustments accordingly. Another benefit of self-management is that you get to screen and choose your tenants. And many new investors really like to have a choice in this. Of course, you have to make sure that you're abiding by all local and state laws. Let's talk about the cons of self-management. First and foremost, you're always on. It doesn't mean that you're getting calls 24/7, but there's always a potential that somebody could call you and you have to be comfortable with this. Another aspect is that sometimes things can happen at your property and sometimes bad things can happen at your property. It's something that you don't expect, but it can happen. And unfortunately, sometimes this can cause some people to get out of real estate investing entirely. And then the final con of self-management is that you're trading your time in exchange for saving on that management fee. And time is our scarcest resource. So let's talk about some tips for self-management. First and foremost, you need to familiarize yourself with your local tenant law and regulations. Next, you want to make sure that you set up a strong screening process and make sure that screening process, again, aligns with your local regulations. You also want to make sure that you have a solid lease. Now, you can have a lawyer draw up a lease specific for you, or you can purchase one. In fact, if you don't have a lease, I recommend you check out the state-specific leases on biggerpockets.com. You should also walk the property with your tenant or guest goggles on. So what I mean by this is walk the property as if you were a tenant or guest. And this is something that property managers do on their own. But when you're self-managing, you want to make sure that you do this. You want to make sure you look to identify what are some opportunities that you can optimize your property to either increase rent potential and or increase amenities that cause it to rent quicker. Or you want to make sure that you're trying to prevent those 3 a.m. calls and finding and uncovering opportunities to optimize your property to make sure that you don't have maintenance issues down the line. And then my final tip is you should always pay yourself a property management fee. There's a couple benefits to this. First first and foremost is that, well, it's a write-off. And second, you want to make sure that if you ever change your mind in the future and you want to have the property managed, you've already taken into account this property management fee. In fact, whenever I'm analyzing or underwriting a property, I always include a property management fee because while I don't hope something happens to me, if it does, I know my wife isn't going to manage the property and I want to make sure that the numbers still work. How about a third surprise option? I mean, who doesn't like a surprise? And the third option is that you don't have to choose one or the other. You can do a hybrid model. In fact, this is what I personally do. And so I self-manage all of my properties that are close to where I live. And then anything that's further away, anything that's out of state, I hire a property manager. Now, if you're interested in learning more, search the Bigger Pockets Self-Management book and get your copy today. All right, thank you so much for your time. Again, my name is Michael Glunk. And for those of you, and I'm sure there's a few, that were just sticking around to get the answer to my original question, yes, I am a natural blonde, although it has definitely darkened a bit over time. And so if you want to learn more about me or you want to connect, you can do so via my website, michaelglunk.com, or connect with me via Bigger Pockets. And if you like videos just like this, you should definitely like and subscribe to the Bigger Pockets channel. If you're a new investor or you're looking for tips and tricks and tools about real estate investing, then definitely check out biggerpockets.com. That's it for today. We'll see you next time.